Welcome to Jumpstart Your Savings with your tax refund, presented by AARP as part of the America Saves Think Like a Saver virtual town hall series. Settle in as the America Saves team, industry experts, and influencers discuss how to save for the unexpected at one of the most opportune moments, tax time. Together, we'll share strategies and tools for saving for the unexpected, how and where to get your taxes filed for free, and some things you should be aware of when filing your taxes this year. As always, we encourage you to engage with us, share, comment, and ask questions. But most importantly, we want to ensure that you get the support you need to take action. Now, let's get started.
Thank you for joining us today, and happy America Saves Week. We're excited to talk directly to you, our savers, on our second day of America Saves Week. Today's theme is Save for the Unexpected. And in this Think Like a Saver Town Hall series, we're going to dig into taxes today. Now, we know that tax is not exactly everyone's favorite subject, or anyone's favorite subject for that matter, but our presenting sponsor, AARP, and experts from Vita sites, the IRS, and Forbes Advisor are going to help you feel empowered and confident, if not excited. Not surprisingly, due to COVID, there are some intricacies to filing your taxes for 2020, but that's 2020 in a nutshell. We want all of you to feel confident this tax season, to be empowered to maximize your tax refund, and to leave this town hall equipped to save for the unexpected. Tax time is perhaps the single greatest opportunity to really build up your savings, whether you're calling it a rainy day fund, an emergency fund, or just saving for the unexpected. One more bonus from our event today. Don't forget to enter the I'm Saving For sweepstakes, where you can win one of two $500 prizes to jumpstart or add to your savings. Now let's meet the Pugh family, where they share their experiences saving for the unexpected.
My name is Robert Pugh, and this is my wife.
I'm Emily Pugh, and we are
The Pugh family.
the Pugh family.
Yep. And we have 3 kids. They're currently 8, 9, and 16.
Mm-hmm.
The boy is the middle child. So we bring all 3 of those. We've been in the military for about 16 years.
Mm-hmm.
We've traveled all over the country and all over the world. And actually, North Carolina was our first duty station, and we are back here at North Carolina as hopefully our last duty station. So we'll see if that works out for us or not. I'm a saver.
Yeah.
So, I mean, our relationship
I'm a spender.
is spend and save.
Yes.
So we balance each other out. I grew up with the mentality of once you know your current cost of living, every time you get a pay raise, that doesn't mean I get more stuff, bigger cars and bigger things and payments and monthly. I don't do all that. I pay debt off, I save it all, and I build up. We had a roof, the whole roof was ruined. We actually purchased the home, and first-time home buyers. And in the midst of buying that, it was about 2.5 years later, and we were looking at selling the house or renting it, but we had an appraisal come through, and the roof was
10,000.
10 grand. We had to replace the whole roof.
We were not ready for that.
No, what the state law required when we purchased it originally, the state law required the roof to only be okay for 2 more years. And then 2.5 more years later, we got it appraised, and the state law changed, and they were like, oh, this roof's totally bad, and it was $10,000. Don't let yourself get too frustrated when the answer is not simple. So be patient with those that you ask the question of, and be persistent in asking others. But keep trying, because someone wants to teach you.
And if you can't figure it out, marry a saver. And go to americasaves.org.
That's right.
Take the America Saves pledge and choose your savings goal by visiting americasaves.org.
That's right. A lot of times, saving for the unexpected can invoke feelings of stress or fear. But because savings is a habit, not a destination, We're encouraging everybody to keep a positive mindset, just like the Pew family recommended. Focus on the unexpected and stay positive. Joining me today about saving for the unexpected are Catherine Harvey, Senior Policy Advisor, and Martin Booker, Program Manager with Financial Resilience, both from our partners at AARP. Catherine and Martin, welcome. Thanks for joining us today. So, Catherine, let's jump right into it. Why is it so important to save for the unexpected?
Well, if last year taught us anything, it's to expect the unexpected, right? And the truth of the matter is that all of us, no matter how good we are with finances and how much planning we do, life happens. Whether it's a car repair, hot water heater, need to travel for family and friends, to care for a loved one, things come up. I'm a researcher and a policy analyst, and I've looked at the savings challenge from a number of different angles. And this is what I can tell you is that no matter how much money you earn, no matter where you live, your age or your race or your ethnicity, everyone experiences something unexpected. In fact, we surveyed people over the age of 30 and found that half of Americans encounter an unexpected financial challenge in any given year, and that more than half of them experience more than one financial surprise. So that's why it's so important to be prepared. At the same time, though, I think it's important to talk about saving for the unexpected, not in the negative. Don't think of the worst case scenario, because at the end of the day, that's really not motivating. What I like to think about is, what are you saving for? Is it birthday presents, a trip when we can travel again, college, kids, a wedding? Those are your priorities. What you don't want to happen is an emergency to get in the way of you reaching your goals. So that's why it's important to also have an emergency fund.
Excellent. I love that idea that by saving for the unexpected, we're actually saving more money for the fun things in life. And at America Saves, we say to aim for $500. That's it. We know that there are other calculations and recommendations for an emergency fund, but we think there's a lot of importance to just setting that initial goal for $500. Why, Catherine, is $500 an ideal benchmark to save for the unexpected?
Sure. So, of course, one thing I want to emphasize is that no one was expecting the year we had, the year we just had. And it's not entirely any of our responsibility to be financially prepared for an entire year, potentially of disruption from our jobs and from our lives. And that's why we really need to continue to keep pressing lawmakers for recovery and relief legislation to deal with the effects of the pandemic. But when it comes to saving for ourselves and taking responsibility for covering those bumps in the road, $500 is important because it's achievable and it actually does make a difference. I mentioned that I'm a researcher, so I looked at the evidence and it's out there. Having just $250 to $700, the Urban Institute, which is a research think tank in Washington, D.C., found that having anywhere between that amount of money can actually mean the difference between keeping your apartment or your house and eviction, right? So this is a modest sum of money, but can really make a difference. Last year, the AARP Public Policy Institute sponsored research that found that if you hit only a month of savings, of income rather, in your savings account at any point over the course of 3 years, you're much less likely to have to skimp on food, to have to miss a rent payment, or to have to skimp on medical expenses like doctor's visits. That is to say, you don't have to think about the 3 to 6 months of income savings rule of thumb. It's really great to have, but it's hard to get started and it's hard to maintain. A modest goal that's still a challenge, like $500, is a good place to start, and it really does make a difference when life throws curveballs your way. Another thing that I like to keep in mind, Amelia, with regard to savings is that unexpected expenses happen, and that's what your savings is for. If you set aside an emergency fund and you spend it on a new appliance or a car repair, you shouldn't feel guilty about that. You should feel good about it. You had the money in the bank. You didn't have to turn to high cost credit cards or other forms of lending. You didn't have to ask family and friends to borrow. And that's an achievement, right? So just because your savings balance may fluctuate or even go to zero at certain points during the year doesn't mean that you're off track. It actually means your savings is working like it's supposed to, like a fund to help you smooth out those bumps in the road. So I would say if you're looking for a goal, $500 is a good place to start. Commit to saving that amount. And remember to separate that savings from your other savings goals because you want it to be there when you need it.
Absolutely. Thank you so much, Catherine. And you gave some really great concrete steps there. Have the separate account, have it designated as a savings account for that specific goal. But we don't just like to tell people what to do at these town halls. We like to give them concrete tools to succeed. So, Martin, for folks who are looking to start saving for the unexpected, what free tools or resources are out there that they could use that would help them in that?
Sure, sure. Thanks for bringing us on, Amelia. I'd love to tell everyone about the AARP Money Map, which is a free online tool from AARP that anyone can use. So it's open to anyone that's 18 or older. You do not have to be an AARP member, and you can use this tool as an opportunity um, to manage unplanned expenses or manage your debt. So for the tool, we have two solutions that you can take advantage of. One focuses on unplanned expenses. It'll allow you to make an action plan to cover any unexpected financial emergencies that you have. And as we know, that saving for the unexpected when you do so, it's a great time to have a guide that can walk you through what to do in those cases. So in this case, if you have an unexpected financial emergency, such as a medical expense, car or home repair, you can use the AARP Money Map to as a guide to walk you through what to do, and the guide will also walk you through what to do if you haven't saved for the unexpected expense yet. So the tool will let you know what to do in those cases when you haven't quite prepared, when you haven't quite saved the money yet. But if you do have the money saved, the tool will be very helpful in that case as well. The other solution that the tool offers is our debt manager. And in our debt manager, you get to make a plan that will help you to determine which debt to pay first and how much to pay, so that you can truly maximize the impact of each dollar when you're paying off debt. The strategies that we use within the tool are ones that are set by trusted debt advisors. So you'll know that the plan that you have has been vetted and has been created from advisors who are trusted in the financial space. So take advantage of the AARP Money Map. We have more solutions to come, but in the meantime, please take a look at our unplanned expense solution. If you have an unplanned expense that you need, that you could use a great plan to work through, or use our debt manager, which will walk you through how to manage your debt. This will be a great tool to use at a time like this. If you've already started saving for unplanned expenses, or if you haven't, the tool can walk you through what to do in either case.
Excellent. Thank you so much, Martin. We really appreciate AARP joining us today and also sharing this great tool, the Money Map, with our savers. It's very approachable and very useful in saving for the unexpected. Thank you, Martin. As Catherine said, even having $250 to $700 in a savings account can make a tremendous difference for folks. So, what we're saying today, while we're talking about saving for the unexpected during tax season, is this is a really ideal time to start building up that cushion to help you when an unexpected expense arrives. We know that it's daunting. Catherine started us off today saying that we don't want to think about the bad things. We don't want to imagine every bad thing that can happen. So, this savings account, saving for the unexpected, will help you not have to think about it because you know it's there. And if you're maximizing your tax refund, you're best going to be able to start that savings, $500 emergency savings. So use the money map that Martin walked you through if you think that will be helpful. We love giving you tools to put into action the ideas that we're talking about. And now I'm going to turn it over to our Director of Communications, Kia Young, to talk to us about free financial counseling and coaching that you can utilize if you'd like a professional to volunteer their time and professional services to help you do a financial wellness audit.
America Saves has partnered with our friends at the Yellow Ribbon Network and AFCPE to offer you, our savers, free financial coaching and counseling. That's zero cost to you. Working with a financial coach or counselor is the perfect way to create a workable plan for your savings goals, whether you're trying to build a emergency savings fund or save to buy a new home or even save for that vacation that we're all going to take as soon as it's safe to travel. You can be assured that you will be placed with a financial coach or counselor that is well versed in your area, understands your specific financial situation, and is committed to formulating a spending and savings plan that will help you reach your specific goals. All you have to do is head to the link that our team is placing in the comments and complete your intake form. Be sure to let them know that America Saves referred you. And of course, I need you to have an amazing America Saves week.
Thanks for that, Kia. I hope our savers who would like to work with a financial counselor or coach take advantage of that generous opportunity from AFCPE. So joining me now are Kara Williams, Finance Director at Reinvestment Partners, and Rosa Mamie, Senior Advisor at AARP Foundation. Kara and Rosa, thanks for joining us today.
Thank you.
It's good to be here. Thank you.
So tax isn't exactly the shiniest or most exciting topic for folks to talk about, but it's so important. And so let's dive right into it. When folks are hearing about free tax preparation, what are the options for them?
Well, the main option for them is the sites that are supported by the IRS, the Vita sites and the AARP sites. They are nationwide. There's some near any taxpayer, wherever they are. And these are really trained and qualified volunteers that are providing this service, sometimes a lot more so than the paid preparers. Yeah.
And so, Rosa, what are those words that Kara just said, Vita and TaxAid?
Well, TaxAid is a program of the AARP Foundation. We've been around for over 50 years. And as Kara said, we are run by over 36,000 volunteers across the nation. And we provide free tax service for low and moderate income folk. We are glad to be able to help people in community and with a lot of different options given COVID, which we'll talk about, I'm sure. But traditionally, we've been an in-person service where people would show up and get their taxes done. Because we are AARP, a lot of folks will sometimes think it's just for the 50 plus, but we serve families and all types of folks who want to come visit us.
Excellent. And Kara, who qualifies to use a Vita site? If they see that there's a Vita site or multiple ones in their community, who gets to take advantage of that?
Well, basically, these sites are geared towards low to moderate income families. So families typically earning $56,000 or less. Now, that income limit has been thrown around for years, and it used to be like a hard and fast rule that people would stand by. But nowadays, as people are finding themselves in situations where perhaps they had to take money out of their retirement or something extraordinary happened to them in the tax year and their income all of a sudden went up when it isn't normally that way, the IRS has lifted that requirement somewhat to say, okay, well, the stated income limit is a target. So we can still serve someone that makes more, even though we're targeting the lower income community, low to moderate income community, as long as they don't have anything real funky on their tax returns, like they don't have a business that has employees, they aren't claiming losses on their tax return, they aren't incorporated, those types of things. That would be a little more complicated than we would like to serve at the Vita site. But that covers a large swath of our communities. And so basically, call us and ask us to make sure if you have documents that we can cover at our sites.
Excellent. And Rosa, you specifically mentioned if someone sees an AARP tax aid site, it's not just for folks over 50. Is there any income requirement to use tax aid?
There is not. I mean, we do serve low to moderate income, same as what Kara was saying for her constituents. So a lot of it is more around the complexity of the tax return, and we do train and have IRS certify our volunteers every year, new or returning volunteers. And really, we prepare returns based on the scope of what they're trained to do. And that's really geared toward issues related to low and moderate income folks. So, sometimes we may get higher income folks, but for the most part, given the communities where we are, it tends to work out that we're serving our target audience.
Excellent. And we'll talk later today more about the EITC, which plays into exactly what you're talking about. But let's first talk about the pandemic. We know the vaccinations are rolling out there, but in COVID times, what changes have these programs undergone and what should people expect?
Well, with tax aid, like I said, traditionally we have been an in-person program, but we really had to pivot. The program is like many of these programs shut down in the beginning or middle of March of last year. And our staff and the volunteers really pivoted to try and come up with online options. And we've learned from that going into this season that we're in the very beginning of. So we still have kind of our modified, what I would call modified in-person, which would be traditional in-person service, but with obvious, physical distancing and safety measures in place. But now we have low contact and no contact, so contactless options. Low contact, there may be 1 to 2 short encounters between the volunteer and the taxpayer to drop off documents or to sign documents. Or we have contact-free, which is essentially everything is done online, no in-person encounters. So we are trying those out for the first time this year. A lot of training has taken place, not only on the tax law, which we traditionally do, but now on a lot of technology-based types of ways of doing things. So it's very different.
Thank you, Rosa. And Kara, what are you seeing at Vita sites? Is it a similar hybrid? Is it all virtual? Is it all in person? What can folks look for there?
Well, it is a similar hybrid, and different Vita sites are operating differently depending on their capacity. Here at our sites, we are trying to push people as much as possible to the contactless system, but we do have taxpayers that don't have access to the technology to do that, or just to know how they don't have enough experience to really get their documents to us. So we are employing a dual system where you can drop your documents off, we'll prepare them remotely, and you can come back and sign off for them. We prepare them remotely, and then we try to get you on the phone or over Zoom to actually go over those returns. We are having to be very careful about making sure that we're verifying identities when we're doing things virtually, that we aren't sharing information with someone that is not the taxpayer. But we are building the plane while it's in the air, as they say, and we're doing a pretty phenomenal job and having a good time while we're at it. We're finding that a lot of the aspects of this virtual prep, we really like a lot more than the traditional. And it seems like it allows us to do more volume and be more efficient and accurate in our prep because of how we're running the sites. So we're liking it.
Well, I'm glad to hear it. It's great to be adaptable, and it's even better when it's actually fun. So we've given our savers today a lot of information. Let's switch to giving some advice, and let's start with giving One word of advice from each of you to taxpayers this season. We know you at home don't want to do your taxes, but you probably need to. So, Kara, what would you say to those taxpayers at home?
Well, my biggest advice would be that they really need to choose a preparer wisely. And I think because our services are free, Vita and TaxAid, because our services are free, people tend to think that they're not getting as good a service with a Vita site as they would if they went and paid somebody. But it's just not true. Like I said, we train every year, we certify every year to prepare these taxes at different levels and different scopes. Our volunteers are tested, we're supervised, we get spot checked by the IRS. I don't know any paid preparers that go through those obstacles to be able to prepare for the community. So we're ready, we're capable, we're able. Just because you pay doesn't mean you're going to get the best service. So come on over and save that money, especially during this time when your family needs to keep that money in its pocket, and let us prepare those taxes with you and for you.
Rosa, words of advice for our savers at home.
Yeah, absolutely. One of the things, just a reminder, even though you're working with a tax preparer, whether they're paid or free, taxpayers, ultimately, you are responsible for your tax return as if you were doing it yourself. So just make sure that you take a look at, everything that your tax preparer does, that you feel comfortable. You ask all the questions that you need to ask, because you're going to be asked to sign something saying that, this is your tax return. So just make sure you're kind of aware of everything that's happening.
Thank you, Rosa. So thank you so much to Rosa and Kara for joining us. To everyone at home, we always try to give you something concrete to implement or to utilize based on what we've gone over. So from Kara and Rosa, you can now find a site that does the preparation that they've been talking about this whole time through the link at the bottom of the screen. This is a link through the IRS, irs.treasury.gov/free tax prep. That's also currently going into the chat. So you can click on it there, and it will also be in our resources that we'll send out to you. So you don't have to memorize it, but both of these programs that Rosa and Kara have spoken to us about today, you can find one in your local community through this link. So use it, find a site. Thank you, Rosa and Kara, for joining me today. Thank you so much for your great words of wisdom. And let's move over to Amelia Dalton from the IRS so that we can get more information about avoiding scams. Hi, Amelia. Thank you for joining me today.
Thank you. I'm glad to be here.
We are as well. So this is Amelia Dalton for our savers at home from the IRS. We've been talking about y'all a lot today, so your ears may have been burning. We want for our savers to maximize their tax refund. And we know that if they want to get the most money in their pocket this tax season, another thing they need to do is avoid tax scams. So if we want our savers to be savvy this tax season, what are the warning signs that our tax filers should look out for?
Some of the warning signs is we have something called the Dirty Dozen, and this represents the worst of the worst tax scams. And it's compiled annually, and the Dirty Dozen lists a variety of common scams that taxpayers may encounter. The list of the scams are on irs.gov. You search the word Dirty Dozen, or we have a link also, I think, in the comments section below. A couple to watch out for is phishing. And what that means is taxpayers should be on alert for potential fake emails or websites trying to steal their personal information. And one of the important things to remember is the IRS will never initiate contact with taxpayers via email about a tax bill, a refund, or economic impact payment. Don't click on a link claiming to be from the IRS. That's another important point that we would like to stress. Another thing is the economic impact payment or refund thefts. Much of this stems from identity theft, where criminals file false tax returns or supply other bogus information to the IRS to divert refunds to wrong addresses or bank accounts. So that's only two of, I think it's about 12 listed on our site, but these are the two that I wanted to stress today.
Thank you, Amelia. And for our savers at home, our initiative, Military Saves, has put together a nice little graphic for all of you at home. Um, these are our list of 5 things the IRS will never do. So, when in doubt, refer to this list. And like Amelia highlighted as well, the IRS has expanded this list to 12, their dirty dozen. So, if you want to have the most money in your pocket this tax season, if you want to be maximizing that tax refund, we really want to make sure all of your money is going to you. Um, so let's dive into it. As I said at the beginning, this might not be everyone's favorite subject, but we're about to really get into the grit of tax season. And as we discussed, it's always a little complicated, and this year it's got some special complications just for us because of COVID. So I'm joined now by Kimberly Washington of Forbes Advisor. She's a tax analyst and a CPA. Now that we know what to watch out for, let's talk through some of the specifics of filing. And Kimberly, when we're talking about tax refunds, the single biggest boost to a refund is the EITC. What is it? Who gets it? How do you get it? Tell us about the EITC.
Right. So it's called the Earned Income Tax Credit, and it's available to millions of Americans. About 25 millions of Americans file it each year. But with that, 20% stated by the IRS does not even qualify or actually claim it on their tax return. But what it is a refundable tax credit, which means that if you file your tax return and you're expected to get a refund, it actually can boost your refund and put money into your pocket. This is why this is a very important credit to take on your tax return. Another thing you want to keep in mind is that it's available to you whether or not you have children, and it's available to individuals who have low to moderate income. So for instance, if your income is less than of about $56,000, you will qualify for this credit. So if you are a person who believes that you do qualify, talk to your preparer and learn the different steps that's needed so that you can claim this credit.
Excellent. Thank you. Amelia, now that we understand what the EITC is and who's eligible, the rules this year are a little bit different, of course. What is the look back rule?
The look back rule is Congress passed this in December of 2020, and what it means is taxpayer can use their 2019 earned income to figure their 2020 earned income tax credit and the additional child tax credit if their 2019 earned income is more than their 2020 earned income.
And so, what are they looking back to? What counts and what doesn't? What should tax filers be comparing between the 2 years?
Okay, what they're looking back to is they're looking back to their earned income. And when we say earned income, we mean wages, we mean tips, employer-based disability, self-employment income, military pay, union strike benefits. Those are only a few when we say that.
Excellent. Thank you. So, that does not include unemployment insurance. Is that right?
That's correct. It does not include unemployment insurance, and it does not include child support as well. Those are not included.
Excellent. Thank you, Kimberly. Excuse me. Thank you, Amelia. I shouldn't be forgetting your name. Kimberly, we know that some people only received a partial stimulus last year, or even no stimulus at all. Talk us through the recovery rebate credit. What's available to those people to recoup some of that money?
Right. So if you are a person who did not receive your stimulus payment last year, or if you are a person who received a partial payment as it relates to your stimulus payment, you may qualify for what's called a recovery rebate credit on your tax return for 2020. And keep in mind, if you are a person who's not required to file, you will still need to file your tax return this year to receive that credit. So if you remember or recall, rather, in the last 2 rounds of stimulus payments, the first round was about $1,200. The second round was $600. So if you fell into the category and didn't receive it, you can use this year's tax return to actually file for that credit. So that's something to keep in mind. Normally speaking, a person who's able to qualify would be an individual who's single, who earns less than $75,000, or if you are married, less than $150,000. It's going to be the same rules for the recovery rebate credit. So that's something to keep in mind, but you definitely want to make certain that you do file for this credit so you can receive that additional credit on your tax return this year.
Thank you for highlighting that, Kimberly. As I've said over and over again today, what we're really focusing on all of the little turns and details that can help our savers maximize their refund if they're eligible. Um, and also for our savers at home, Kimberly wrote an article on this that's posted in the comments right now. So if you really want to read up, or if you're like me and you're a tax nerd, then you can just read more information on that. Thank you for that resource, Kimberly. And last question for Kimberly and Amelia. Our savers need to know, do they have to pay taxes on their stimulus payments?
So I'm gonna jump in, and the answer is no. So if you also too, you want to keep in mind if you did receive the stimulus and you did no longer qualify for 2020, you don't have to repay back the government. So that's also something to keep in mind. But generally speaking, you're not required to pay taxes on the stimulus that you did receive in the past.
I hope you all heard that at home. Christmas came early or late, depending on your holiday preferences and how you think of 2021. But Kimberly, thank you so much for highlighting that. I think you've made a lot of people's day by making sure that our savers know that that is not taxable income. Martin, if we're trying to build financial resilience, sometimes it's as simple as understanding how the things that we're navigating work. And I know from America Saves for Young Workers that teens and young adult dependents have a lot of confusion during tax time. And if they have confusion, oftentimes so do their parents. So let's rattle off for our parents and adults who claim dependence, how they should handle having a teen or a young adult who earned money. First, for our parents at home, basically the general rule is you do have to file a tax return usually if you earned $12,400 or more in 2020.
Yep. And thanks, Amelia, and glad to be here still. One of the a couple other great points to add to that, right? Is for any child who's made under $12,400, it's still a good idea to file your taxes because there is an opportunity to recover any additional withholdings that may have been owed to your child by the IRS. So if they're under 12,400, still file because they can be very beneficial. Also, even if your child is claimed as a dependent, just know that they should still file their taxes. And if they've earned less than $54,000, one good option for them is the Vita sites to file their taxes for free. So keep that in mind as well. And the last thing that I'll mention about our young workers and filing taxes is that one of the important things is to begin that savings pattern, right? It's something that we've been talking about all day. So if you can encourage your young worker to continue to save even a small amount to begin or continue that savings habit that they may have.
Absolutely. That is such a great highlight, Martin, bringing us back to what is this all about? We want you to maximize your refund so that you can save as much as possible and spend too. We're not telling you not to. We want you to do both.
But that savings is very important. I think we can all remember a time when we can look back on some lump sum of money or some windfall of cash, and we think, oh, if I only would have saved a little bit more, right? And and those things become beneficial in those times of need, or they become beneficial in those times of paying down debt, whatever we're working on, right? So we want to keep continuing to build that savings habit.
Absolutely. And so to recap for our parents or adults who claim dependence, your young adult has to file if it was over 12,400. They don't have to, but they should, as Martin said, if they made under 12,400, because they may still get their withholding back. But take them with you to that Vita site. Take them with you to that tax aid site. Prepare that together virtually because they do not claim themselves as an exemption. Kimberly is making sure that we've got that point solid as well.
I was just shaking my head saying I agree.
We're all on the same page here. So we have a digital flyer both for parents and teens that's being put into the comments right now. It answers a lot of those questions that we all just emphasized and re-emphasized to you. And now we have the IRS here. Amelia is not going to be able to say, yes, this is okay, or no, that's not okay from the IRS. But we have Kimberly Washington, CPA, tax analyst with Forbes Advisor, Martin Booker, program manager with Financial Resilience at AARP, and Amelia Dalton with the IRS. So for our savers at home, we can take your questions now. And I see that we have a few queued up here. It looks like the first one is for Kimberly about the pending possible stimulus payment, and especially around this talk around the child tax credit. Could you really quickly kind of let folks know what the writing on the wall is there and what that is going to mean for them?
Okay, so two things, of course. I'll start with the child tax credit. So we know that there's a bill that's being proposed by President Biden. And in this bill, what is being proposed at this time as it relates to the child tax credits, if you're familiar with taking a child tax credit, normally you take it on a tax return. So it reduces your tax liability or it can increase your refund. But now what the proposal states now is that you would actually receive a monthly payment. So a lump sum throughout the year, similar to a stimulus payment. And also another thing you want to keep in mind as far as changes with the child tax credit, the bill also proposes to increase the amount. For instance, right now the child tax credit is $2,000. This bill will increase it to $3,000 if you have a child 17 and under, or if you have a child that's under the age of 6, you receive $3,600. But in essence, it's going to increase it, but also allow you to choose whether or not you want it as a monthly payment. And as it relates to the third round of stimulus payment, there's been a lot of buzz around it, many questions. This amount is proposed right now, $1,400 per person and $1,400 per dependent. And again, this all stems from President Biden's American Rescue Plan. So it's expected that this bill will actually pass. And if it does so, you can see these changes as early as mid-March.
Excellent. Thank you so much, Kimberly. So we have another question about the look back rule in the EITC. So I think it looks like there are a few questions. So to sum it up, the look back rule is essentially a trick, or not a trick, it's a law that's allowing folks to maximize the benefit of the EITC. So Karina asked, which one should you use, 2019 or 2020? And how are you deciding between the two? I know Amelia and Kimberly, neither of you can give advice, but maybe Kimberly, if you could start us off clarifying that, and Amelia, if you have anything to add to that, let's go there.
I would say that, and I think Amelia did a really good job. But first, you have to understand what is earned income. Earned income are your wages, your compensation. And what it's not unemployment, it's not child support, and it's not alimony too as well. So what this provision allows you to do, let's say for in 2020, your income has actually declined. And so now you no longer have earned income, so you're not eligible to receive maybe a higher tax credit. This provision would allow you to look back to your 2019 tax year. You can compare with 2020 and determine, hey, which one will provide me with a higher credit? And then that's the year that you're going to allow or use rather when you file your tax return.
Amelia, anything to add to that?
Yes, I would just like to add that not only is this for the earned income tax credit, it is also for the additional child tax credit. So on those two is the two that you can use the look back rule.
Excellent. Thank you for clarifying that. Kathleen wants to know, is there a parental income limit for taking advantage of the child tax credit?
I can answer that. For the child under current law right now, as it stands before any changes, if you're a single individual, it's less than $200,000, and it can be eligible for children who are under the age of 17 years of age, $2,000 per child. If it's married individuals, the threshold is $400,000 where you're able to receive the credit. And again, it's $2,000 per child under the age of 17. This is before any changes are expected to be changed as it relates to the new bill that we're expecting to pass within the next month or so.
Thank you. And then We have one last question. This looks like it's from a service member. They understand that there was something that happened with the payroll tax, the payroll tax deferral. What was that, and what does that mean for filing their taxes right now this season?
I can
Kimberly,
answer that.
you take it.
I can answer that. So we know towards the end of the year last year, there was an executive order by President Trump. And so during this time, individuals or employers rather were given the option, private employers were given the option where they can defer payroll taxes. Payroll taxes are amounts that's taken out of your payroll, which of course reduces the amount of net pay that you receive. So in the last quarter of the year or so, those employers who opted to opt in this program, they actually at that time, they did not have to actually pay those payroll taxes, and employees did not too as well. As it relates to federal employees, most of those individuals were automatically opt into the program. This will not impact your tax return per se, because what's happening once you file your tax return, the correct amount of withholdings are on your W-2. So you'll just file your tax return just as normal. But if you did not have payroll taxes taken out of your check towards the last end of the quarter, you may have to double up as of right now, and you'll see more money being taken out of your check. That's how it works. But again, it will not impact your tax filings as it relates to your W-2, because everything will be reported correctly and you'll just file that tax return.
Thank you for explaining that, Kimberly. I know that our partners at Military Saves have really been emphasizing that to a lot of our service members, because they were in a particular income bracket that is very likely going to be affected by it. We had one last question let's take one last question from our savers. I'm not sure if we know the answer to this question. Karina asked, if you file your taxes before the new Biden amendments are passed, would your credits be adjusted, or how would that work for those who have already filed or filed early?
I can answer that one. I think what she's asking as it relates to the stimulus payment, is that what she's referring to?
And I think also probably the child tax credits, I would assume.
Okay, and so what you can expect, so if this bill, again, it's a strong possibility that this bill will pass. Right now, we're in the 2021 tax season, which means we're filing our tax returns for 2020. But basically what happened, as it relates first to stimulus, what's going to happen with the Internal Revenue Service, they're going to use either your 2020 or 2019 tax return on file to determine your stimulus payment. As it relates to the child tax credit changes, those changes are expected for the 2021 tax return. So when you file for 2020 at this time, it's not going to impact your tax return at this time. So you can look forward to the next tax year.
That is tremendously clarifying, Kimberly. Thank you. Amelia, did you have anything that needed to be added to that about tax filing early or later this season?
Well, yes, I kind of interpreted the question differently. When she mentioned that, I didn't know if she was talking about, e-file did not open until the 12th of February. And a lot of people had already completed their return and sent it in, and it was just kind of like being held in what we call a queue. So once those returns processed through, let's say if they were not correct, or let's say once all the programming was done for tax law changes, the return will be adjusted by the system. So I didn't know if she was referring to that.
Excellent. Thank you both, Kimberly and Amelia. Extremely clarifying on what's for last tax season, what's for next tax season, and how that will be also handled internally by the IRS. Well, thank you so much to Amelia and Kimberly for joining us. I'd like to turn it over to Martin Booker from AARP. And thank you to all of our savers at home. Like we said, we know that it's not exactly the most exciting, but we've all got to do it. So we hope that this has been really helpful to you. And most of all, we hope that all of you are going to be saving some portion of your refund, and that you're getting the largest refund possible to you under the law this tax season. Martin?
Yes, Amelia, thank you. And as you mentioned, taxes, it's not always the most exciting thing to talk about, but we all are happy when we get that refund and we have that opportunity to take advantage of our opportunities to save and to catch up on bills, whatever it is that we have to do. We're always glad for that opportunity, and we can turn to the professionals so that they can prepare us and make sure that our taxes are done the right way. So we just had an amazing conversation today, a very informative conversation, and I'm just excited that he was able to be a part of it. I hope that everyone listening was inspired and you're ready to start or continue your savings journey. We know tax time can be that opportunity when we are provided that larger refund or just some additional funds that can make a difference in our finances. So we highly encourage everyone to use those funds to make productive decisions, such as paying off an unplanned expense, or managing your debt, or saving money for anything that may come in the future. That's definitely a priority of AARP's. Our highest priorities is encouraging our members and encouraging anyone in our that's watching or paying attention to us to manage your debt, to manage those unplanned expenses successfully, and to prepare for your short and long-term savings. All these things can all be referenced in our money map. So please take a look at our money map, and as well as our other resources that can be found at AARP/money. So as we all know, we never know what's going to come in the future. So holding on to any accessible extra cash will benefit us in those times when something may come up that we need funds for. So, based on this town hall, it seems like there are 3 critical things that we should all take from this. One, let's take advantage of our free tax preparation options that are available to us, and make sure that you're taking advantage of all the credits and all of the benefits that there are within the tax space. 2, save as much of your refund as you can for whatever may come. And then 3 is a quick shameless plug, which is to visit our money map for AARP for your free personalized plan to manage your unplanned expenses or manage your debt. And that's at AARP moneymap.org. Moneymap.org. So please take a look at that. It's been our pleasure as AARP to be the presenting sponsor for this America Saves Town Hall on planning for the unexpected. Thank you so much for having us.
Thanks for attending the Jumpstart Your Savings with Your Tax Refund Town Hall. The team at America Saves hopes that you leave this town hall motivated, encouraged, and ready to save successfully, reduce your debt, and get on the path to building wealth. Don't forget to take the America Saves Pledge and then take advantage of the free financial coaching and counseling generously provided by the Yellow Ribbon Network and AFCPE. Also, be sure to enter the I'm Savings for sweepstakes, where you can enter to win one of 2 $500 cash prizes to jumpstart your savings. Be sure to join us on Thursday for the Think Like a Saver Tackling Debt Town Hall, where we'll discuss how to save and pay off debt at the same time, how to use credit responsibly, and how to avoid or overcome predatory lending practices such as payday loans. That's taking place on Thursday, February 25th at 2 p.m. Eastern. Special thanks to our partners whose generous support allowed us to bring you the Think Like a Saver virtual town hall series. And thanks to our 1,700 participating organizations who've made America Saves Week 2021 an incredible success already.